I'm John Jenkinson. Glad that you're here with us on this Monday. Let's go straight to the futures. And the futures are provided by Bar Chart. July corn up 5 at 5.78 3/4. The December up 7.5 at 5.19 3/4. Over in the soybean market right now, we've got the July up 16 3/4 at 14.39 1/4. New crop November's up 12.5 cents. July Chicago wheat is up just 3/4 of a penny at 6.55 3/4. Kansas City July wheat up 3 3/4. It's at 6.20. And the Minneapolis wheat market for July is up 1 3/4 at 6.73. Cotton had a pretty big gain last night of the overnight trade, but today we're only 39 points higher, or now 52 points higher on the July at 85.55. Todd Horowitz with Bubba Trading joins us now to talk about these markets. And Todd, there's been a lot of talk about inflation and the inflation play in this market. So you're a great asset when it comes to talking about these outside markets and how you view things. Is inflation starting to worry some of these fund managers, and that's what's putting a little bit of a boost over here in the grain commodities today?
You know, John, good morning. It might be causing some issue, but I don't think, if you continue to listen to the Federal Reserve, they keep telling us that we don't have any inflation. And even though the data supports that there is some, they continue to deny or say no. And of course, when you continue to add money to the money supply, I think what you're really seeing is money moving there because of because they're looking for new places to take new money. Because as long as money remains at the prices where it's at 2%, 2.5% interest rates, people are borrowing and investing, and so are funds. And I think that's more the case than the inflation bug.
So let me ask this then. You were talking about borrowing that money, investing in it, and as long as your investments are exceeding a 2% or a 3% yield, you're making money. So what happens when we run out of this quote-unquote free money at 2.5%?
Well, that is always the problem. But, if you're locking in loans at these levels, which many are, again, if you're a company that knows you can make X amount of dollars, per every dollar that you have, or have proven that, then you can go ahead and borrow that money. Now, the other story, John, is that, people will chase yield at every place. And of course, it looks like the stock markets, although they're higher, not today, but in general, they're making new highs, that there's so much money being made there by the big money that they're looking for new places to go. And the secondary markets where they always go next are the agricultural space. And of course, grains first and then livestock. And that's where you're starting to see these trends pick up as well.
Now, you've been pretty bullish on all of these grains here for quite some time. You still feel pretty bulled up on these?
Oh yeah, no, I think they're looking great, John. Again, look, until they show me otherwise, I have no reason to believe we're not going to continue to go much, much higher. Now, again, there'll be pullbacks. I'm surprised. This is the first Monday we've been together in months that we haven't been lower. But I don't see any reason that the trend is going to change anytime soon. We'll have some volatility, we'll have some movement, but overall, they look like they want to go higher, and I would not be surprised to see 10, 15, 20% gains from where we are right now.
All right, Todd, well, we're not seeing much of a gain over in the cattle complex today. Let's talk about that and the hogs. That's all coming up next here on the Market Day Report. Well, there's been a big pullback today in the cattle market, and this kind of extends from what we saw last week. First of all, the futures provided by Bar Chart. April live cattle down 45 at 120.40, the June down 35, and the August down 45. The bigger losses come over in the feeder cattle complex, and it's May down 140 now at 142.32. August down 220 at 152.35. But even though we're down 227 there, we're well off the low by about $1.50, buck and some change. Now, hogs are a little bit different today. We're sharply higher, and we have expanded limits here. June lean hogs up 327 at 104.97. July up 282, and the August up 265. So let's go back over here to the cattle market. It is encouraging, isn't it, Todd, that we're off of some of the earlier lows over here?
Well, it is, John, but we have turned slightly negative on cattle here. I think they might have overdone the anticipation of the opening of the country and opening of the economy. Now, personally, again, based on just my opinion, I like cattle here. But again, on the methods that I use, they have turned slightly negative, and I'm hoping they turn more positive sooner rather than later. But right now, we're a little bit negative on the entire meat complex here, or the protein complex, until something changes. The sell-off has been pretty hard, and again, we still are at reasonable prices, but we've given up a lot of ground over the last couple of weeks. So that does make me a little bit negative here. Deep down in my heart, I want to be long and I want to be an owner, but right now I have to follow the trend of the market. And the market says right now they go a little bit lower.
All right. Well, that hog market today are really taking off. It almost seems like some of the money that's coming out of cattle is going back over into hogs.
Well, listen, hogs have been under some pretty heavy pressure. You would expect this is almost, to me, just a natural bounce off of some heavy selling we've had over the last couple of days. Now, again, we're a little bit negative on the hogs as well, but overall, I think it's going to be a good, solid year. But I think there's going to be periods of volatility and periods of sell-offs, and I think this is just one of those periods that we're going to be a little bit negative for a short period of time, and I think things will turn around quicker. But we have to be careful, and if you're trading, you just have to be, more invested. And if you're hedging or you're farming and you've got them, you've got to just be hedged so you can protect against these moves, because otherwise you're putting yourself in jeopardy you don't need to be.
Todd, great points. Thank you very much. Hope you have a good afternoon. The Dow is down 137 at 33,944. So we're back under that 34,000 level. We'll keep track of all of this. Janet, back to you.